Commodity Capsule, a segment we have designed in order to wrap up the entire week's global commodities activities for you. Barring crude oil, this week we have seen most of the global commodities continue to extend their weekly losses. Metals have been particularly worst hit. London copper, if you see, it is easing its way down to fifth straight weekly dip. The red metal is down nearly 1% so far this week, and it has lost almost 8.5% on a monthly basis. Now, LME copper continues to hover around the 6-month lows this week. Now, USD gathered some momentum, and the metal market continues to face some heat from the dollar index. The US dollar has formed near 2 months high, and it has passed its 103 mark. Resolution to the US debt ceiling debate is in sight, and this is continuing to underpin the US dollar index. Now, the sluggish economic recovery in China continues to drive the demand-related worries, and copper inventories have also risen on LME warehouses and are almost registered at 6-month highs. Similar is the case with LME Zinc or nickel, which are hovering near their 31 months and 8 months lows respectively. Both the metals are down 4% so far this week. The refined zinc prices are expected to continue the downward trend until the year 2005 because a surplus has been registered in the month of March as far as International Lead and Zinc Study Group is concerned, and similar is the case with nickel as well. Coming on to silver, it continues to plunge deeper. It's trading near its 7-week lows, and already the metal has lost 2% so far this week. Firm dollar index and broad-based weakness in the base metals continues to pressurize silver. And we have seen that it also continues to be pressurized by the precious metal, the yellow metal, that's gold. So far as M6 silver is concerned, it has already shed nearly 6,000 rupees in 7 trading sessions. Coming on to gold. Gold this week slipped under its key $2,000 mark. Gold prices fell sharply this week itself and have not been able to come over. And similar is the case with MCX Gold, which has dipped below its key 60,000 mark. Now, Biden administration, it has expressed optimism that a deal to lift the US debt ceiling could be reached this week, and this is the primary reason why we saw US dollar index surging, and all the gold bulls, they were seen hitting the door, considering that now prices will take a dip from here. Global gold touched its record high of $2,082 earlier this month, and you can say from that time itself, so in the time span of nearly 2 weeks, the yellow metal has shed over $120 from its record high levels. Crude has been pretty much lucky, although it had a very rocky week. It is headed for registering its first weekly gains in 5 weeks. Oil prices rebounded because investors are now optimistic about the fading risk of US debt default, and this comes after the US crude inventories that have jumped unexpectedly last week by 5 million barrels. The worst hit, you can say, in the entire pack are global agri commodities, which continue to witness sharp declines. Grains, oilseeds are worst hit, 3 to 5% lower this week, barring coffee and cotton. All the agri commodities are headed to end lower this week. This is the second weekly decline that they are going to register. Falling demand for US supplies, higher output, and forecast by USDA and International Grain Council continues to weigh on most of the agri commodities. Seaboard soybean is near 19 months low, soya oil is at 27 months low, and even global wheat, raw sugar, they are hovering near 2-week lows. The extension of Black Sea grain deal by nearly 2 months continues to weigh on grain prices. This is all for the week. We'll see you next time.